Hey traders, welcome to Charts and Coffee. Happy Tuesday again. Great to see everyone. Let's go ahead and kick this off with a quick look at what's happening with the indices before we get to the JOLTS release. That's at 10 a.m. this morning. And even though we have non-farm payroll on Friday, and even though we have not the FOMC on Wednesday, this is probably the big first hot zone that we've got of the week. And aside from the earnings, I mean, earnings are a different conversation. We're going to stick with the macroeconomic needle movers. But again, if you are trading the indices, and we have 5 of the 7 magnificent sevens reporting this week, remember the impact that's going to be felt in those indices and in those sectors. But again, that's not macro. In fact, I was writing this up in Top Tier Outlook, the newsletter that we have here at Simpler, as well as the newsletter that my Sector Secrets Mastery folks get with their membership. One of the things that I mentioned is nowhere within the hallowed halls of the Federal Reserve are the FOMC members that are voting sitting down and saying, gosh, Apple sold fewer iPhones. I guess we can't cut rates. Nowhere is it happening that, Meta's got fewer eyes on the site. We can't hike rates. Those conversations are not happening. So earnings are not the macroeconomic needle movers for the Federal Reserve, but they are high concentration weighted events. So 2 different things. I get a lot of emails about, hey, what will earnings season do? Add lots of volatility. That's really it. And remember that, for every, say, in NVIDIA, this is why I consider this to be, one of those events where we can have some decent moves. We can have some high volatility, launches, things like that. But you also have the Intels and the Nike reactions as well. So everything doesn't have to be sort of predictable. Things don't have to recover right away after an earnings-led sell-off. I think Nike and Boeing are 2 really good examples of 2 very separate events. One was an earnings event, one's more news. But please don't presume that cheaper is a bargain, right? It's just cheaper. Keep that in mind. So that's kind of where we sit. It's a funny period of time where we know that dovish pivot is coming from the Federal Reserve. The timing is still up in the air. Therefore, we're seeing still overall very bullish indices, right? But just not the same vigor that we saw maybe in December or early January. But we're still looking at maybe not March rate cuts, but definitely May and June. In fact, the expectation for May and June to see quarter point cuts are as high as they've been. So, all right. So with that being said, let's get into this. As always, good to see everyone. Good morning. Good morning. Absolutely. Good morning, D. Bolton. Good morning, Candace, Sign Seeker. All right. First question of the morning comes from Java. What do I think of IWM for the next 2 weeks? Okay, so let's just unpack that. I trade what I see, not what I think or feel or hear. And for the next 2 weeks, not a clue. Does anyone here see into the future? I definitely don't. So what we always want to remember is what's going to happen in 2 weeks. Why 2 weeks? Why not 10 days, 27 days? Why not 2 months, right? And I don't say that in any way to mock, but gosh, gang, if we want to be better at traders, we've got to ask better questions. I don't know what's going to happen. And guess what, Java? Nobody else does either. However, we can play probabilities, right? So if we think that someone knows where this is going to be in 2 weeks, that means clearly I must know where it's going to be at the end of the day. Nobody knows. Let's think about what's going to move RTY over the course of the next 2 weeks, right? So let's sharpen up how we can process what's happening. We're counterpunchers, gang. We're not crystal ball readers. So with that being said, if the Russell's moving higher, that's Russell futures, and it's got the KRE moving with it as well, now we've got something we can work with because the number 1 weighted sector within that Russell futures, which is what's going to map to the IWM, is moving. And I like the long side, right? I mean, I would presume that considering what's happening and the probability of buying into the daily price movement range being as good as it has been, let's just keep working that, right? Is it a trend? It's not. So I'm not as optimistic about acceleration through 205 as I would be, say, on SPY or QQQ. I'm not as optimistic about the continuation because there's a really good argument to be made about overbought resistance levels than pushing up to higher highs and higher lows. So right now, I love the focus on this. I'm so glad you asked. Uh, but right now, it has to be a very short time horizon. That means that it's going to be, can we get down to the gray zone and move up into the gold and then do it again? And then if there's going to be a trend that organizes, here's what's really cool. The gray zone, which is volatility support, and the gold zone, which is volatility resistance, will very organically start to angle higher and set us up for following the trend. But if it's very parallel right now, if it's still very sideways, they're just kind of moving sideways to each other, we're not going anywhere really yet. So we want to see not just the gray zone kick up, but the gold zone kick up as well. Then we know we're starting to see higher highs and higher lows and potential continuation. We also want a whole lot more green grab candles. Way too many neutral ones here, right? So it's got to be a short-term view in this chop where we seem pretty contained by the gold and the gray. But once the gray starts kicking up and then the gold kicks up, that's going to be an early indication of potentially some higher highs and higher lows. And then we'll also see the momentum line, which is gray right now, which is neutral. Gray meaning it just disappears. I love how the gray just disappears. There's nothing to be, there's nothing to see here, carry on kind of thing, right? If that starts to plot green, now we know some bullish momentum is coming in. Momentum should precede the trend, and then we can see what continues to unfold from that point forward. All right. Next up is, can we review Intel? Ren, of course. All right, so let's get to it. Intel, big move down on earnings. Give it at least, one of our guidelines, right? I won't say it's a rule, but one of our guidelines definitely is I don't play earnings, right? That's a binary scratch off ticket. Go buy a lottery ticket, right? That's, to me, what we did, right? It's easy for me to say, well, Rog, what did you do? We bought Intel on the gray zone, right? On that gray volatility support, wrote it up higher, and then exited the party before they called the cops, right? That's it. We got out before earnings. And ultimately now, so the first day after earnings, leave it alone. At least 1 to 2 sessions of trading before we even think about re-engaging. So today would be the completion of 2 sessions being traded post earnings. And today, if we hit the DPMR, it might be interesting. I'd rather see a minor low. I'd rather see an oversold stochastic. And I'd rather, Ren, I'll tell you this, I'd rather crack open the SMH and try to find things that have earnings in the rear view or at least 2 weeks away and play the trends in the SMH. And the way that we do that, you know what? Let me show you all, because sometimes I know it can be tough because the thinking is, well, Rog, I'm thinking and asking questions that I think will get me to where I want to go. And so I'll tell you, and it used to bug me, but it's made me a better person. For 10 years, I've had someone looking at me saying, and how'd that work out for you? I'll tell you what, gang, the first time you take a sip of that, it does not go down easy. But then when you realize, okay, that's really the question we have to ask ourselves. How's that working out for us? And when the answer is, well, maybe not so well, we have to adjust. It ain't easy, gang. I'll tell you that. So let's take a look at SMH together. Of all the things that I could look at, this is my plea for everyone to understand what relative outperformance is. I try to give it lots of different names, rising tide, rising boats. I try to give it names like trade this, not that. That's all in an effort to show everyone what you trade is more important than how you trade it, right? That's what we want to keep in mind. What do we want to avoid here? TXN, Intel also. But what's in a green trend? It's not as if we don't have other things we can focus on. So what's in a green trend that's gotten through earnings And now we can buy the dip on, whether that be a volatility dip, whether that be a mean reversion, maybe you like retracements, whatever it is, right? Maybe one of the best ways to handle the volatility of the number one sector so far this year and last is to play the broader group, to play the tide and not a boat, right? These are all questions that we need to ask. So SMH might be when we have liquid strikes, that might be a really good alternative to say, hey, I like this corner of the market, meaning the other folks, the other stocks, the other friends that Intel has, but there might be a better way to take advantage of it. And that's the way I look at that, right? But I would leave Intel alone until perhaps maybe this week it can get to the DPMR. But remember, this week also has a lot of macroeconomic needles, starting with needle movers, starting with jolts at 10, the FOMC themselves tomorrow, and then non-farm payroll on Friday. Hits just keep on coming. All right. D. Bolton asks, do I avoid exiting a losing position during a hot zone? D. Bolton, here's what I would say about that is there are price-based exits, right? Our targets. There are stop losses, price-based. But is there a time-based exit? Can we hit the eject button? And I do believe there is always a choice that every trader can say, which is, do I want to take on outsized risk during a hot zone of high volatility, or do I want to wait for the aftermath? So what do I mean by that? If I have an open position that I've scaled out of maybe twice and I'm down to that very last 1/3 or 1/4 of the position, that means I've realized profit on 3/4, 2/3 of the overall position. It's sitting in my account as a closed trade, not unrealized monopoly money, right? At that point, maybe with that tiny position, I can take on a hot zone, right? If that's not the case, I think hitting the eject button is not a matter of asking, how much could I make? Which, by the way, is what losing traders do. There are certain things that we all do when we're losing. I don't bring these up because I haven't done them. I just ask myself, what was the mindset that I had when I wasn't consistently profitable, when I wasn't consistently managing risk? And I stopped thinking that way, right? That's why I say, let's not talk about prediction. Let's not talk about what we feel and hear and think, but rather what we see. Yeah. So these are all mistakes I've made, gang. And I realized if I keep on with that thinking, it's not going to lead me to where I want to go, which goes back to, right? How's that working out for you? It does work out well for me to consider how much could I lose if I'm wrong into a hot zone. And for me, that's usually the thought that wins. And so, yes, can you avoid that? Yeah, by exiting, right? By exiting. All right. So let's see. What else do we have here? Let's see. Good morning. DYNF. I don't know what that one actually is. Let's go take a look, but I'm going to bring it up on TradingView. I haven't given TradingView any love in a while. DYNF. All right. So here we go. Nice uptrend. Overall, pretty strong. It's been kind of going back and forth in terms of strength. Do we want to look at a potential move to the downside? Well, you know what? Here is what might be a little bit more helpful when we look at something like DYNF, which I'll be frank, I am not super familiar with, but it's easy to figure that out. So if I look at DYNF, this is a BlackRock equity factor rotation ETF. What on earth is it, right? So the first thing we got to ask is, what are we trading? What is this trend? Clearly, it's something that has some risk appetite within it, right? I don't know if it's super liquid in terms of the option chain. I'll have to take a look at that, right? And whether or not it's actually fairly liquid. It trades about 1 to 3 million shares on average. So a little wild in that regard, but let's take a look at what it is. This is really interesting. If you've never cracked open an ETF, this is what's in it. Wow, that's kind of an interesting look at a lot of names we know and love, dominated by Microsoft, Apple, NVIDIA, which makes it very much like XLK, which makes it likely to track really well with, for the most part, the NASDAQ and then the S&P. There are some other names in here that are interesting, like Home Depot, Exxon, UPS, and Visa, which would put it a little bit more in, say, the S&P and the energy and the financials and the transports, right, corner. But if I look at these names and if I'm pretty happy with the heavily weighted ones, this is what's inside that particular symbol. Yeah, I would focus on the long side in that regard. All right. So sometimes even above just looking at the price chart, look at the volume, and then also look at, I think in addition to that, look at the composition of it. What's firing it higher? What's the reason for it moving higher? Let's see. Srinivas also asked, no SMCI in the list. In the list of what? No SMCI. Well, if I'm looking at super micro computer, look, gang, there are stocks that are memes. They're having a moment, right? I'm not usually going to trade stuff like that. So here's it's a fine symbol. Okay, but these are those kind of symbols that everyone starts playing after a candle like that. Okay, that's not a list on any list of important stocks. It's a stock that's moving right now. It's a stock that's having a moment. Yes, and good for it. But if we map out our trading, and I don't mean for the next 10 days or even the next 10 months, I think in decades, right? What about the next 10 years? What about the next 20 years? Are these the kind of names that grow my account? No. This is meme stock trading. And that's fine for some folks. I don't do that. You know what we're in right now? We're in Bank of America. These are trades I have actually alerted the members. We're in Bank of America, moving higher. We're in JP Morgan. We just grabbed some GE, Disney, gold, right? I don't play meme. Not that there's anything wrong with it, but I don't play meme stocks. So SM, I have no skin in this game. I don't plan on putting any skin in this game. But you've got to be a very active momentum trader with high risk management to play things like this, because as quick as it goes up, you all know how these stories tend to end, right? Okay. Once we run out of people to buy at higher highs, someone's going to be left holding the bag. Be careful. That's the list that it's on. The be careful list. All right. So let's and be careful with things like this. Watch where the volume is. A lot of folks ask, Rod, what would you do? Right? Gun to your head. That's the only way I trade something like this. What do you do? Look at volume. Look at volume, because this is a volume game. It's not a price game. Who's involved where? If they're not going to defend that price, look, what's that saying? You look around the table and you don't know who the sucker is at the poker table. I think trading, especially chasing Momo, is a lot like that. Okay. All right. Next up is MARA. Hey there, Richard. It had a nice bounce off the 200 on the daily. That's cool. It's trying to get up through 20, which would be great. Keep an eye on where the VWAP for the year is. Isn't that interesting? It's at about $20.50. As far as for a day trade, I don't know until the bell rings, my friend. So, let's see where it is in relation to the previous session close. That might give us some good sentiment reads. Same with Tesla. Although, yeah, I know you mock. Yeah, I love the mocking your favorite. I hate this stock. I hate this stock because it's bringing down a very healthy sector, right? Tesla's inclusion in the NASDAQ and the S&P, Tesla's inclusion and the XLY does nobody any favors. If you like the stock, trade it for what it is. It sits on its little island, and it tends to drag down. Right now it is anyways. What it's also included with: S&P, NASDAQ, XLY. But it's moving higher above its previous session close, Richard. So if I were to at least start the morning with a sentiment read, it would be bullish. Yeah, it would be bullish. Yeah, Jan, I thank you so much for asking. Gang, I know sometimes it might sound a little tough, but the worst thing I could do is just go, oh, great. And here's how we traded. I look back on the things that I wish I had when I was a young trader, and I never wish for, oh, I wish people were easier on me. I wish I was easier on myself, but I never go, oh, I wish people were easier on me. It's my mentors and my business partners being tough on me that continue to raise the bar, right? And it's really cool to look back on 32 years and go, wow, every handful of years I can see I'm raising the bar, raising the bar. So that's all I hope to do for anybody. If you're tuning in, just want to raise the bar. With that being said, I got to shut up. So I will I will talk with you all tomorrow, same time, same station. And real quick, Java, great question on the seasonals. Seasonals don't matter this year. No, not for stocks. The Fed does. The Fed is the seasonal. If you want to throw the election cycle in there, that's fine too, but the Fed is the seasonal. Dovish pivot eclipses all. I'll see you tomorrow, gang. Same time, same station. Be good to each other.